again and welcome. This is Robert Schein, Managing Director and Partner of Blanke Schein Wealth Management. Well, Happy New Year. This is our first edition of the 2022 new year here at Blanke Schein Wealth Management. We're going to talk about the bond market volatility today, Nasdaq selling off, and then a new variant. Does the market really care anymore? So let's get right into it, and thanks for watching. First and foremost, a very happy birthday to Rick Blanke Sr. It's his birthday today, January 4th. He always reminds us on 4th of July that it's his half birthday. So today's his real birthday. So everyone, we wish you well and happy birthday, Rick. Today, let's discuss this. So bond market volatility right now, as I film this, we're looking at a 10-year treasury at 164, almost 165, which is elevated from when we started the year. So bond market basically are seeing some sell-off and some volatility. So keep in mind, when interest rates rise, bond prices come down. Okay, but also when we see interest rates rise, go higher, we also see the Nasdaq or big tech sell off, because Nasdaq aren't so much cash flow companies, let's say like financials that provide dividends and cash flow on the short end. So it's a cash flow driven sort of a trade and valuation. They're longer dated assets. And oftentimes when you have higher interest rates, tech sells off because of that long dated, basically future pricing of valuation and cash flow discount, that they're not producing any cash flows like value. So value is outperforming growth year to date, which is anticipated and expected. At Blanke Schein Wealth Management, we're balancing our portfolios. So like while last year growth did better than value is starting to do better than growth. Think financials, right? Energy, if you look at oil right now, we're up 6% year to date. So what are the markets really telling us? What should we be paying attention to in the short term? Well, right now, markets are telling us that the 164 handle on the 10-year treasury as interest rates rise, what we're going to pay attention to is a 1.7%. If you followed along at home last year, like I know you have, on our updates from time to time, we brought to the forefront of what the markets really care about, right? So we talk about moving averages on the S&P, but much like that, it's a bandwidth or sort of a trading range that keeps sort of everything sort of in where it should be. So on the 10-year treasury, on the high side, which is a high from last year, 1.7%, we tested it a couple of times, if you remember, and we backed off. We believe right now with the forward momentum, with the market not really caring too much about what we're seeing with the new latest variant. Now, 2022, I'm going to say this already, we're going to have more variants to come. It's almost a certainty. Why do I know that, Rob? You're not an epidemiologist or a doctor. I just know that there are 9 more letters in the Greek alphabet. So I'm pretty certain we're going to be using them all. Maybe next year, maybe the year after, who knows? But hopefully this health crisis gets behind us, because the market is saying that. It's seeing through, because we're seeing new highs. In fact, the Dow Jones Industrial Average, remember, it's value versus growth. Growth is down today, which is the Nasdaq. The value, the Dow, had a new high. So markets are seeing through sort of the health crisis of what we're seeing. And that's a good thing, because ultimately markets look towards the future and say, hey, listen, do they discount it into today's calculus and say, is it going to be a major shutdown, a major hospitalization and health crisis, or not? And so right now, the first couple trading days of the new year, the Santa Claus rally is continuing, and we're seeing that, but we're going to pay attention to the 10-year treasury once again. We're going to talk about Federal Reserve this year and the Federal Reserve policies, and a few other things like geopolitical. So we're going to have an announcement on our 2022 market outlook later this month. It's going to be a webinar, and we're going to invite everyone to join us, and we're going to give you sort of our thinking, our insights, and our overviews of what we expect and how we're going to position our clients here for the new volatility that we're going to see in 2022. So that's our update for today. Thanks for watching. And again, Rick Blanke Sr., have a wonderful, happy birthday. We'll see you a little bit later.